Good morning, everyone. Welcome to the Euro Trade. It is Monday. It's actually bank holiday in the UK. It's also bank holiday in Japan as well, so I'm not sure how many opportunities we are going to have today. So I figured maybe we can do a little bit of a learning session to see exactly what my levels are and how I set the charts up and all of that good stuff. So how does that feel? How does that look? How does that feel? I mean, I don't know. Maybe we'll find a trade, right? But for now, copper is in a range. RBOB is ranging as well. Natural gas in a range. Equity's not doing much. There was a little bit of movement in Asia, surprisingly. But yeah, let's just sit and wait, right? I'm not the biggest fan of trading anything. Yes, full screen. There we go. Thanks, Bruno. Not a big fan of trading on holiday days because the volume is quite sketchy and it just brings more risk into everything, right? So how did everyone do last week? Because we had the NFP Friday. Hopefully people are still alive. And you haven't totally blown up because that was a bit of a tricky one. Anyways, I took a payout on Thursday live on air. So obviously the balance is going to be a little less here because of that. But anyway, let's crack on with the charts and see what we have on the big daily charts to begin with. I'm going to erase some of these levels here so we can have a clean slate. I always start every week with like clean charts so that I don't have any sort of a bias coming in from the trades that I've done the last week and trades that I thought were a good idea and whatever. So we want to erase that. Just like Drew Barrymore from 50 First Dates, her character has like a traumatic brain injury and she can't retain anything into the new day. There's no like memories carried over. We want to be like that. We want to be like Drew in 50 First Dates. And also I had something over the weekend that knocked me out of ketosis. So, and then overnight, obviously, I went back into keto. I am so dehydrated this morning. Like I have a pretty massive glass of water here with me. So hopefully I'm not going to be coughing too much, but it was ridiculous. I woke up and I'm like, just parched. Trader YAML. Topstep crew LFG. Yeah, so LFG, let's just rein in the emotions a bit because like I said, it is bank holiday, so you're missing the entire big exchange today. So expecting, massive moves, it's going to be a little bit different. We're not going to have the Euro close today either. We might have the Frankfurt close, but we're not going to have the London close, which is what usually drives those like little reversals around 4:30 p.m. my time, which is 10:30 Central, I think. So yeah. So yeah, let's just pause. I see already people like, short now, short this, short that. Just hold your horses, okay? There's a reason why I'm saying this. I mean, it's your money, right? So what do I care? But I'm just saying that I've seen, these holiday days during London when bank holiday is in force. So there's no London Stock Exchange, okay? So, the only thing you have is the overnights on the CME contracts, and that's just going to be like retail people trading. There's no big players around. So let's just breathe and chill. All right, copper on the daily. So I have been focusing on copper. I mean, I'm also trading natural gas and YM, and those three have been kind of the staple. I pop in a trade into our Bob as well. But copper for this time of day seems to be the best out of those. Would have preferred to have DAX, obviously. We don't have DAX yet. So, I've posted that link many times to upvote Eurex and keep upvoting it until they bring it. So there it is again, just in case you are also interested in trading a very, very nice, smooth product that is appropriate for the London session. Vital wants to know, is it a good idea to skip tomorrow entirely before the Fed meeting? The way I approach it, I still look for trades earlier in the day and up to about a couple of hours before, because, let's face it, FOMC meeting is late in the day. Like, it's only, it only kicks in 2 hours before the electronic close, right? And that means you will have some opportunities, but obviously you have to be a little bit mindful that they will be waiting for stuff. So if you find like a couple of scalps here and there, that's okay. I mean, look, anything can happen, right? So we've had days where prior to the FOMC meeting, we have these big unwinding moves. Do I think that's still going to happen? Probably not this time around, because we've just had some pretty large moves into the end of the month. And just statistically, those don't really happen that frequently. We do have the increased volatility, but the volatility is just, the measure of how much we go from top to bottom, right? You can still have it be in a range where, we go up, we go down, and then for the rest of the day, it does nothing. I would be more inclined to fade any moves before the FOMC, but definitely 2 hours, about an hour before then, I just stopped trading everything. I typically like to trade instruments that are not super sensitive to FOMC. Remember, I'm more of a commodity. I am a commodity trader mainly, even though I do trade DAX, but my products are, energies markets, precious metals, and they do get a reaction. But out of all the metals that you observe, it's going to be gold that is the most sensitive to those kind of releases. And that's because gold used to be traditionally a part of like portfolios and stuff. It was a protection against inflation. It was a product that is supposed to protect you against risk as well. It's probably why we're so high up too. But when it comes to copper, when it comes to natural gas, when it comes to RBOB, they have a little bit of a reaction, so that, you kind of tend to see a bit more volume, but it's not like carnage like, equities and gold. So keep that in mind. Don't lose your head. If you trade gold and equities, you need to be super careful, because I find that with equities and gold, it reacts to everything, and it's just like, ugh, you can't even trade, like, come on. But some of my commodities are fairly muted for most of the releases. So we'll see what happens. So don't, Vital, don't necessarily skip it all together. You can always go into a practice account as well to gather experiential data. You don't actually have to be in active trades. You can even just observe, just have your levels on the chart and see, let's how this moves, and not have the emotions in it. That's actually more helpful. Every time you have emotions tend to prevent brain development, because you're always in this like high cortisol state, fight or flight, and you don't grow, you just don't grow. You're always like fearful. So if you make a decision that you're going to maybe just observe how things happen around your levels, what price action looks like, what is the order flow doing around those levels at the time of these releases, maybe record your screen as well for future reference. This is what FOMC looks like, and then you can go back and you can go, let's see how the last one looked, and not be in trades at all. And that's still very useful. I would actually say it's more useful, that kind of walk forward observation without any emotional involvement. That's actually a pretty powerful tool for traders, and not many people do that. Everybody wants to click buttons. Robert Cooney is in the chat. Good morning or good evening. It must be super early for you. Yes, very good to see you, Robert. Trader Yamel says, if I go short side, we need room for expansion in New York. Yes, if you're talking about New York, this is way too early for New York plays. So, yeah. Way too early for me. All right, let's drop down to a 4-hour chart. Bit of a bleed back the other way. I'm always suspicious when I see price action like this on a 4-hour chart, because this is all weak, right? So we drop down with quite some conviction, and then it's like, oh, are we reversing? Nobody knows. Oh, look, it's VWAP. Oh, yeah, we're going up? Not sure, not sure, not sure. Yes, we're going up. Oh, we're not sure. It's like, you know, you have to imagine this as if it's the pit, right? So it's like, do you want it here? Yeah, maybe. Do you want it here? Oh, I'm not sure. Oh, actually, I want to sell it. Oh, you want to sell it? So, you know, there's like confusion the way I'm looking at it. It's just kind of kissing VWAP and not really, you know, ungluing itself too far away from it, ending up in very suspicious looking candles here. So I would still be short, like gun to the head. I would be taking the developments from, you know, very large time frames like the weekly chart. This is what that looks like. So, you know, big smash down. Then we had a pullback. Now we have another reversal. This is a reversal pattern. You know, it's a bearish engulfing. But what I don't like about it is the fact that it's got a massive buying wick. And again, I'm so dehydrated. It's so sorry. Yes, and I would be short, but I'm very careful that there's a big, massive buying wick that comprises almost like 50% of this candle. So when it comes to big time frame candlesticks, I do like to look at the composition of the candle and what's actually in there. So the bodies are saying bearish engulfing, but the wicks are telling a slightly different story. So I'm going to stay open to both sides of the picture. I'm not going to create a bias one way or another until I see something more obvious. I mean, I do that anyways. It's just that sometimes it's more obvious which side you should be taking. But yeah, nothing to do just yet. So let's put some of my levels on here just to make this into a little class. Let's leave the middle 9 EMA there. Okay. So we're going to drop down to a 30-minute chart. Let's see where the London... Actually, no, let's see where the COMEX value is located, because London is not open now anyway, so that doesn't serve anything to anyone. Okay, 471.80 is the value high. This is the distribution curve from Friday. And so not developing. It's not the developing value. It's the one from the previous session. $71.80. I'm going to change this to purple. Why? Just because. So this is COMEX value high. If we stay up here, we might have the open sentiment skewing upside. And we may have a value acceptance as a possibility as well. Okay, 66.50 is the COMEX value low. There we go. So those are the first two lines that I have on my chart. Now you can see that the Globex VWAP is sitting at 71.30. So really right now, as it stands, my first area of interest for any kind of OODA loops, observe, orient, decide, act, would be this COMEX value high, right? Why? Because we have a weighted difficulty of breaking through it, because we also have Globex VWAP there, so a lot of stuff is located in this area. If we can go down through that, I would expect a decent rotation lower. Now there is another caveat here, which is settlement right in the middle at 69.80. We'll ballpark there. So I'm going to place the settlement line as a thin blue line, or maybe yellow, because back in the day, yellow used to be settlement. So maybe like this, and then we're going to mark it settlement. I'm not sure whether JD does levels for copper, so yeah. Robert says, we have 186 people watching. Everyone should tweet out that Deeyana is live. Yeah, that would be nice. Yeah, why don't we do that? Everyone tweet you're watching the Eurotrade. I'm so terrible in the, oh, yellow dash line. Okay, let's make it a dash line. There we go. Settlement. Yeah, that was the old, I think T4 had a, was it a, yeah, it was yellow on T4 as well, wasn't it? I don't know whether it was dash though. Can't quite remember. It was a long time ago. Anyway, so those are the first few things that I like to have on my chart. Now, automatically, I also have the 90 MA. Don't really use it too much on a 30 minutes, but 15 and 5 minutes, if we start to crossover, VWAP, you know, to me, that's actually more of a momentum play. And for that purpose, I wouldn't necessarily go down to like stupid tiny time frames and just go, oh yes, 15-second chart is crossing over. So I prefer to use slightly larger time frames for that purpose. And then if I'm looking at real-time price action, I would drop down to, you know, book map, order flow, time of sales, however you wanna do it. But anyway, next. Average ranges. So my methodology uses this concept of, I suppose you could call them quantitative extremes, because they are effectively taken from the average ranges over the last 10 days movement, right? I use them as levels. You can use it through ATR by looking at the daily chart, but I actually have my own software development company that I've had since 2015, and we created something so that I didn't have to mess around with Excel. So basically we have 24-hour ranges. That is this bigger dash line. Don't know how well you can see that. And these shorter blue lines, they are representative of the current active session. I can very easily change between the sessions as well. I also have the fixed daily range. Typically, quieter days will stop at the fixed daily range. What is the difference? Well, two of them are dynamically tracked, and this third one is just literally ADR divided by 2, and then you take the midnight open, Globex open, and you put half above and half below. That's a different measure, right? I call those the fixed daily ranges, and to me, they're only relevant if you're going to have a quieter day for whatever reason. But the rest of them, they're dynamically tracked in the way I do things. So I use them as levels, right? Now at the moment, and this can sometimes change if we have like massive moves, but at the moment we have ADR low sitting around, let's say the round number of 463. It's actually a little bit higher, 463.10. But let's put that here. Change the color to green, because at that point I would expect to see some, you know, at least a little bit of a fizzling out. So on copper it usually fizzles out, but some of the other products, they can actually give you a really, really nice fade from those areas. So this is going to be the full 24-hour ADR low. I'm not going to put the W just because I'm cool. Or not. Yeah. We kind of designate HI and LO, like ADR high and low, in our code, and that's kind of just in my head. I'm going to put in the ADR high now as well, since I'm talking about it. Now that's going to be red, and that's 79.10. 79.10. There we go. Change color. And by the way, guys, I do this like every single morning before I come on to the Euro trade. Actually, let's make it more red. We used to have like, so I don't know whether Robert can answer this. We used to have the like last colors used. Where's that gone? Because that has disappeared. I like that feature. Now we also have the London average session ranges, but honestly today, I don't think that's getting reached. So, you know, we have the bank holiday, and I do agree with Robert. And again, Robert and I seem to have similar similar zones. So Robert, this is what I was talking to you about just the other day, because we were like chatting about his zones that he uses based on like pivot lines, high pivot, low pivot, and I said, yeah, I tried playing around with it, and I'm always coming up with the same zones that I already have. So, you know, we at the end of the day we still look at the same price action and same data. And if you have a systematic approach, no matter how you get there, you will come around to the same levels. So again, my zone is saying 79.10. Robert's saying 79.15. And he goes, we're both nerds. Yes, very true. Nerds unite. But yeah, so we could go up there. I just don't know whether this is going to happen during the Euro trade. I'm a little bit skeptical because look at this. It's just got stuck in a range, right? So it's like Asia finished, London opens, and it's like, yes, we're just going to spend 2 hours doing absolutely nothing just to annoy everybody. So you would have to turn it into like a scalper here. And what is this range? It's like 58 ticks for the initial balance. So yeah, we're working with like barely like 60 ticks of range. So that means if you can maybe snipe it and be bothered to, you know, snipe 30 ticks till the middle, then, you know, sit and wait forever until it reaches the other side. And the stop runs are the name of the game for range bound conditions, right? So if I now show you just something that is also part of the analysis that I do, but here is, was this Friday? Yeah, so this is Friday's high, and what do they do? Actually, let me just put this as a big red line. Do I have two? I have two. How did that happen? Yeah, so you had the Friday's high, and then they go up to that. They go smash, and then they're like, no, we're going to chill. No, we do nothing. It's like, we took everybody's stops here. Everybody thought that we were going to hold the Friday high. We didn't, haha. And now it's like doing absolutely nothing. So if you know, if I was going to do anything, I would be fading this. But again, I would probably fade it from the top of the range, or at least like the quartile of the range. You don't have to necessarily go all the way up. But what I like to do anytime there's a range, I like to take the low, take the high, divide it into like 4 even quartile areas, and then try and look at the price action and time and sales at the top quartile on a super low time frame. It's, you know, it's pretty systematic. It gives you an area to work with inside the range. But if the reference high where I'm expecting a stop run is already there, then I will probably snipe it from something like this and then looking to continue. Now, I don't really scalp very often. I'm not a huge fan of it. And all of my smoothness of my curve and the fact that, you know, I can make a decent amount of cash with very, very low risk, that is something that I'm really passionate about. So, you know, using a, you know, let's say a 5 micro trade to make $1,000, risking like barely 350, you know, maybe even 200, $150. That's the kind of stuff that I live for. And of course, there's some tasty intraday sort of range-bound trades that you can have, but when the range is a little bit bigger, those are great. When we get stuck in a 60-tick range, that's just like, I would rather go and stick pins in my eyes. Like, that's how I feel about that. So yeah. Vital says, is Wyckoff theory still helpful with trading? So yes, I use Wyckoff theory whenever I am doing analysis on the market structure. So here's the thing with Wyckoff. Doesn't matter whether it's an uptrend or a downtrend, he still goes for the 4 phases. I actually took that as a part of my system and like a little bit of a twist on what he's doing. So we do look at the kind of supplies and demands and, you know, quite going down the rabbit hole with that as well. But when you zoom out, when you're looking at like weekly or daily levels, what you find is that whenever you have some kind of a slowdown, that can be accumulation followed by markup. So if you're not familiar with Wyckoff, he basically has 4 phases, right? We have accumulation, markup, distribution, liquidation in any market, up or down. And this, I think, applies quite nicely to intraday as well, because it doesn't matter whether you've got an uptrend or a downtrend, you can still have days when everything's going counter trend. So it's like, how do you recognize that? Well, Wyckoff says that after I could never, when I was doing the recording my pro development program, I kept confusing accumulation and distribution. I don't know why, because I know very well the definitions between those two, but I suppose under the pressure of the lights and, you know, having to read through a script and everything, you know, I am a nerd after all, and I just got a little bit confused, so I kept saying redistribution, reaccumulation, and I was just like, this is stupid, I need to rename these. I keep making mistakes. So I renamed them phase 1 for accumulation, phase 2 for markup, phase 3 for distribution, and phase 4 for liquidation, right? But what I really like about them is that they have probabilities attached. And I don't know whether you follow me on Twitter or not, but I saw 5 days of overlapping values on copper. You can even see it in the price action. It went absolutely nowhere. It's just that the value area overlaps. Tends to give me more confidence that this is truly distribution. And then what do we have? This massive smash down. This is a massive, humongous candle. So if you were able to recognize that we have a slowdown, and some people were like, oh no, the copper is in an uptrend, now we're going to go up. And it was like, probabilities and my own experience, like, sorry to burst your bubble there, but, probabilities and what I've observed is that after already after 3 days of overlapping values, never mind 5, that's more conducive to those 70% where we're going to have a liquidation. And then this happened. And, some people who were DMing me to tell me how stupid I am to look for copper shorts, I haven't heard from them since. So, and I get a fair amount of horrible DMs on a daily basis, some of them are quite nasty and always with some sort of sexual component in there. And I'm like, yeah, dude, well done. Go have your meds. But yeah, so usually when you are right on some of these things, then none of those people come back to you to go, hey, you were right. How did you know that? No, they just kind of ghost you. And that's okay. Who needs them anyways? Jiwa says, how do you derive settlement price? That's just the closing price, right? So it's the former pit hours close. Because back in the day, we used to have these things called the open pit trading, open outcry pits. And they would have set hours. It wasn't like today where, you can trade 23/7. So after settlement, back in the day, you would go home and you couldn't place new trades or close the old ones. That was it. It was kind of like certain stocks. I think meats and live cattle and hogs, they still do that, right? They're only open for a few hours a day during the active trading hours, and that's it. You can't open or close anything anymore. So from that perspective, you used to have the same thing in the metals and in the energy markets, in everywhere. So there was a set working hours time, and once the pit was closed, that was referred to as the settlement. You can find that every day on Financial Juice. Copper settles at the same time as gold because they're both on the COMEX exchange. So that's 6:30 p.m. my time. That is time zones. 12:30 p.m. Central. And then obviously 1:30 p.m. Eastern as well. So, depending on where you are in the world, just use the world clock with different time zones. So yeah. Discord can be rough. Yeah, not as rough as Twitter DMs. Like people on Discord get a little bit mouthy, but then when you call them out on it, they all also go very quiet. So it's funny that, isn't it? Yeah. All right. So yeah. Let me see if I can show you that GWiz. Where's my financial juice? Did I close it by accident? Maybe. I always have it open. What's going on there? Yeah, so I'm all packed up, by the way. So Friday is the big moving date. I try to do it on the day when I'm not going to disrupt any streams. Okay, so here's financial juice. And let's see if we can find the settlement. So look at this. NYMEX WTI, can you see that? Yeah. NYMEX WTI crude June futures settle at 58.29 a barrel, blah, blah, blah. So here it is. Here it is. So it's published every day on Financial Juice. Same thing an hour earlier. We should find the COMEX settlement. That maybe not in commodities. Is there metals? No. But let's try and find it. So I need to scroll back to the previous week because obviously it settled on COMEX last week. So let's try and find that. I don't see it. Where are they? Or was this Sunday? Yeah, this is Sunday. Well, I'm going to have to scroll forever. May the 2nd. Okay. Yeah, oil in a mess. So we'll see what happens. Oh, by the way, guys, I just want to say today at 10 a.m. Eastern, 9 a.m. Central, I am joining the boys from Mentor Q. Well, actually, Fabio, I think, is going to be there. Whoever uses Mentor Q, you will know that's the options levels guys, and I use their levels quite a bit. So yeah, we're going to have a little chat about oil, energies, and, generally how we use these. So where's the COMEX settlement? What is wrong with this financial juice these days? Am I just blind and I'm not seeing it? Maybe, just maybe, well, let me try this. Settle. So that's all energies, right? I'm not being crazy. Usually there's like gold as well, so I don't understand. I know that they do come up. Maybe all this like stuff that's been happening, that settlement prices just get completely pushed in the back. And there are some platforms that actually have it automatically, but with our one, because I think, and Robert, correct me if I'm wrong on this, but I think that JD is the one who just drags it out of either Financial Juice or somewhere and then puts it on the chart. So it's not like But when I do with my indicator, I actually have a time-based settlement line. And actually, Robert, maybe you can code that, because that's what it is. It's like the price between. So I don't know where the bloody gold and copper settlement prices are, but they usually tend to like have it. So I don't know, Financial Juice, what are you doing? But yeah, on my indicators, so this blue line is the settlement, and how I get that is super easy. It's a part of our VU app, actually. I just kind of smushed it all in there, And, you know, we have quite a lot of functionalities here, but the main thing is that you have the settlement, true, so to make it visible, time of day. You can change this as well. You know, you can have it for daily, weekly, but obviously settlement is a time of day thing. And then apply to close. And then I just set the time of day. Now in my time zone, that's 6:30 p.m. And then it just nicely puts the settlement line automatically. That's what we have code for, right? And then, you know, you can see it, and, you know, maybe it might differ by like a couple of ticks or something, but it's going to be pretty spot on for most things. Now, interestingly, like when we were creating this indicator, I looked at the settlement in equities. And I was actually really surprised to find that settlement in equities is VWAP about 15 minutes after the close price, not the actual like close price. So I was like, really? Did not know that. So, you know, when you're kind of going through some research to do these tools, to create these tools, you do find out quite a lot of stuff about things. But yeah, the settlement price is nothing but basically the old pit close time of day and all of that good stuff. So yeah. Copper still in range. Ajaz, good to see you, mate. Would you say statistically the bracketing results in reversals, right? Yeah, so reversals have 70% of happening. I think I talk about that. I call it the rule of fours, right? That's in the program. And I know you're probably still in there. But yeah, rule of fours, that's what it's all about. It's based on the fact that when you have a consolidation, and an extended consolidation brings a lot more probabilities to the opposite side rather than continuation. Reaccumulations and redistributions are rarities, okay? So if, for example, you have, I mean, this is also a pullback, so I would read this as a big accumulation again. Even in an uptrend, you know, you can have phase 1, phase 2, phase 3, phase 4, phase 1, phase 2, phase 3, phase 4, right? So it doesn't matter whether you are up or down, or whether it's uptrend or downtrend. It's literally just a market structure tool that typically helps you to figure out whether something is moving or not moving. I think many people get so, you know, ingrained in the minutia of everything that they forget to just look at the basic market structures on time frames that have enough trading activity to matter. So not a 15-second chart, definitely. But yeah. Is Anne-Marie going to be on the call also? Not sure. Not sure. I mean, usually Fabio would tell me if she is. So, you know, I'm very happy. I'll be very happy if she is. That would be amazing. But yeah, this time I don't know. And usually she tells me as well. So I'm going to ask her actually. But isn't she like still traveling? Is she back now? Maybe that's why. It's just me. Yeah, I don't know. Yeah, Doggette. That used to be my like female dog, right? It's just a bit of a joke. Yeah. Be sure you have it selected in the settings. I mean, I did have Topstep levels for Hoag's weekly kickoff, but then I realized they're never on copper, so they don't do it for all markets, you see. There we go, they just do it for the major markets, and the rest of us who don't trade major markets are sidelined. Yeah, so you see, I have all of that, and there's nothing showing up, because they don't do it. It's all right. I can do my own levels, you know. Yeah. Oh, she's back. Okay. All right. I'm gonna have to ask then. I mean, I'll find out anyways in a few hours, and just bothering people when they're asleep. Excuse me. Can I wake you up for a second? All right. Roberts, yeah. Robert is saying, go here. Okay, let's go there. I'm not going to be clicking on. That just decided to open up YouTube for me, so I don't know what's going on there. Yeah. King Jones says, good morning, D. Good morning, King Jones. Natty155 says, how do you separate the accumulation in pause continue from a distribution? Well, that's the tricky part, right? The tricky part is that if you're in a fierce uptrend, and it will also depend on the size of the time frame you're looking at. If you're looking at the daily, it's more likely that you're going to have the opposite side stepping in at some point. Maybe we can have a look at ES or something. Let's go look at the daily chart. Now, obviously, you could take the stance that because something is in an uptrend, you are not going to take the pullbacks, but instead you're going to wait for the accumulations after pullbacks and then go long, which is a continuation, right? In some other ways of doing things. But for the most part, here's the daily chart of ES, right? So we have, if we are going to look at it before the tariff craziness, let's just make that bigger. We have what? We're going to start from somewhere, right? So we have liquidation, accumulation. So this is accumulation. It's messy, but it's an accumulation. Markup, one is short, but still markup. This is, again, distribution. We went nowhere, created an equilibrium that ended up extending the equilibrium past the previous candle open, ergo creating a market shift, right? So then what you need? A liquidation. Then here, again, we stop, we create a pin bar. What is this? Markup. What is this? Distribution. What is this? Pullback. So, the unknown is how far is it going to go to when it does finally break the market structure. But basically the big secret is to look at the microstructure changes, right? If you're on a daily chart and looking for structure to change, maybe look at those points on a 30-minute chart and see whether initial balance is also, smashing through. You can smush a few things to get more data out of it, at least the way I see it. But I think my brain probably works in a little bit of a weird way. First of all, I'm a left-handed person. Second of all, I have photographic memory, so that helps. I'm like an elephant, I don't forget much, which is worrying. Yeah, so I don't want to change the volume profile row size because I like it from like a big sort of thing. But yeah, you can use volume profile sometimes, although I prefer my, I don't know why, I just like fixed volume profile. So I prefer to have it over the last 4 weeks. And then it sort of shows me everything. But I use like a 4-week fixed, always 4-week fixed. I can also have the pure volume, and then I can compare it via a similar histogram for additional data. Yeah, the visible volume range for me, it's more a tool like when I'm already in a trade. It's like, are we on a 2-minute chart? Are we building structure? I mean, you've seen me do that. I don't need to tell you, Robert. We've worked long enough. So yeah, for me, it's just like an additional tool in my weird little toolbox. So yeah. Okay, so let me change that. I will take your so what did you say? Row size. I just lost the message. Row size to 500. Okay. Ah, yeah. I see what you mean. Yeah. Interesting. Yeah. I do like it. So what you can do is to sometimes combine volume profile with whether, they're building volume in an area or whether we're just popping into a tiny little low volume node, which has another probability attached to it. So when you have a low volume node, first test of it is almost always going to give you a reversal. And then the second test might bring in a move through it. That's something that I've observed over the years. Now, when you have an uptrend like we had before the pre-tariff, liberation day, actually volatility started right with the Trump presidency, right? You can maybe have a look at how the volume profile looked back then. I mean, this was all pretty thick. This is not really giving me too much information because it built up so much volume in the same area. Suppose you can say this is a low volume area in the context. This is a bit better. So you had low volume right at the edge of this, and then a bleed through. Then we hit the high volume area in this area here, and point of control on a larger time frame. So that was a stopping point for this little liquidation move, and then it kept. So yeah, you can do volume profile, to confirm that. But I really like doing the actual price action change. Like, are we closing above the high? Are we going into a price action candle that is pretty strong with no selling wicks? Like, for example, if we go into copper, right? And if I show you the weekly chart, this is why I said at the beginning of the stream, this is a bit tricky because it's a bearish engulfing. It's a 2-bar reversal. But look at this buying wick. It's effing enormous, right? So it's like, what do they want to do with it? Is this just a messy intraday pullback that, that we kind of went into a bit of a correction after a big smash down a couple of days before in the same week? Is that what's going on? Or is this an actual start of yet another move up? So right now, that's an unknown. Just because we're hitting a bearish engulfing area, I would say that's a newly formed supply, which is why I would still be inclined to do shorts if I can have them. But if the market tells me we're opening above value, we're bouncing from value high, we're bouncing from average range lows, for example, or we're extending initial bounce to the upside, everything is telling me that this is not going into shorts, so I need to stay objective and just to unglue myself from any bias. And I generally don't trade with any sort of a bias. I try to keep my mind completely open to both sides of the picture. That way, I'm never like, oh my God, what happened? It's like, anything can happen. So open your mind and observe, You'll learn a lot. A lot more than being constantly in a trade that's wrong and going, oh my God. Any news on DAX? Your guess is as good as mine. I have no idea, mate. So, I don't know, Sarah. I mean, they kind of have it now for July. I don't know what to say here. I was expecting DAX to come in. Then they keep citing some bottleneck over conversion from euros per tick into the USD dashboards, but Trader Rate has it. Why aren't they having a problem with that? Maybe because they have a Forex feed. So, I don't know. If it was me, my team actually worked on a lot of those types of conversions because they used to work for like various banks, bulge bracket banks like Credit Suisse, Barclays Capital. Was the third guy Deutsche Bank? And then what they did, they created software to convert basically from whatever currency you're in into whatever they needed, the front end. So, because, something like, the banks, they have offices in multiple parts of the world. So obviously I would imagine that the end currency that you're working with is going to be the currency of that country. So you can't just go, well, I don't know, like it's in US dollars. So I'm not touching that. You have to basically have a way of converting things. And I think one of the main issues is having a Forex feed, which costs money, right? So I don't know. I'm guessing that's what the bottleneck is, since on my limited information from what I've heard MP say, that's the problem they're having. If that's the problem, just, we need a Forex feed. Or Project X needs a Forex feed. Just for that purpose, not to actually have it for trading, right? It's like a back-end tool that you can call upon in your variables and just go, yes, convert this via the current exchange rate, whatever that is, based on these numbers, right? So to me, that wouldn't be much of a bottleneck, but that's me. So, yeah. I'm just worried that, TraderRate has it, and a whole bunch of other dodgier firms have it. Not to be mentioned. But yeah, there's, it's a bit worrisome that we don't even have it on TraderRate via Topstep. And I'm sad, because I think we're missing out on a bunch of Asian and Australian traders who would jump on DAX and on Bund. I know, DAX is on Frankfurt Exchange. Some people want FTSE as well. I've never asked for FTSE because it's not really my main thing. But that's on LSE. That's London Stock Exchange, right? The problem is that, we're growing, and we have a lot of Australian traders and Asian traders. That's like the middle of the night for them. And as you know, many of them have day jobs. So you can't just stay up until like 3, 4 a.m., and then go to work at 7. That's not going to happen. So what they do, they like to trade London-specific products. And, today it's probably going to be a bit quiet on DAX, but I've brought out these charts before. Like, we have like ES that moves nothing. And, even today, DAX is still moving because obviously there's some Germans trading. So let's just see ES. ES. YM is pretty widely traded in London as well, I've got to say. But, if you have DAX, I would always choose DAX over YM. So here we go. What's the difference? So I have this black chart is ES. And at the bottom here, I have the ranges, right? This is Bloodstock DR, and it's where it measures how the moves are happening. For Christ's sakes, my screens have been really annoying recently. Like they keep snapping to like weird points, and then it gets stuck like mid-screen. Like, what are you doing? So I don't know whether it's the graphics card or what. Why would that be happening? Maybe I just need to reboot. Not doing that now. Don't worry. So let's have a look at this little indicator. So this is measuring exactly the same thing. Mind you, London is missing from this whole picture. Don't know how much you can see that. And am I blocking it? No, that's good. So ES has moved 81 ticks today. Whereas DAX, with London missing from the picture, has already moved 144 ticks. That's a faster product for this market, right? Smoother as well. But generally, by the time we get to like halfway through the stream, it actually moves like 200 ticks, 220, basically most of its daily range, right? Right now, the daily range is crazy. It's 468 on DAX. And that usually gets done mainly during the London hours, ergo making it, a very good session to trade. And if we go back, you will see that it's reasonably smooth, even during its quieter periods of time. You can always find very nice setups. This is a beautiful range-bound day here. If you keep going back in time, you can see, it moves for New York now. It's not the norm. This is just the tariffs. So right now you can trade it either side. You can trade it New York or London. But for the most part, it will do the majority. And look at this. This is the setup that I call strength inside initial balance. So we pop up to above the initial balance. We do the fake out, usually from Asia high or something. Then we go back to the initial balance for a seeming failed auction. But it runs into VWAP. And VWAP decides to defend its territory and says, no, you're going back up. So I call this SIB, strength inside initial balance. But it's a beautiful setup for equities in particular. So failed auction. Test the VWAP inside initial balance, and off we go. It's beautiful. 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 So yeah. Fingers crossed we get DAX at some point. Desmond says, GC always uptrend on UK bank holiday. Is doing so now. Great. Me and GC are candles that are very big. I don't trade products that I haven't prepared for on a Sunday, by the way. So I have a weekly plan, and shock horror, right? Weekly plan? What? So basically, I do the levels to quite a granular analysis. You know, I want to diagnose what they've actually done. And then I kind of see how it behaved the previous week, and I like to keep a tab on that. If I don't have the weekly plan, I feel like I'm just pulling up a chart and just kind of staring at it and going, let's go. That never ends well, okay? I am a very systematic trader, and unless I know, like if I look at a product and I can't recall in my mind what the daily chart is looking like, it's not a good thing, okay? It's not a good thing. I'm not joking. It's, you're supposed to be familiar with the products that you trade. So for me, having that larger time frame outlook and the knowledge of the trade location is how I get my big trades. I don't get them by staring at a, 15-second chart. I get them by knowing where we are in the large time frames and how we are behaving at the moment. And then my brain is basically matching the larger time frame picture with the lower time frames that I see on the profile, average ranges, options levels. So yeah. And if I don't have that, then that process has to start all over again. So I would have to analyze the GC chart, go back a few days intraday to see how it behaved intraday. And I have specific times of day. I have a concept called time of day as a level. Those of you who are my market stalkers will know this. And GC does like to do these like double-sided moves that are pretty scary. I know that Robert hates gold. I'm not I was kind of, I've seen Robert's, wait, you have a plan when trading? Sarcasm at its best. So yeah, I always want to do my due diligence on the product that I'm going to get involved with. Now, the problem that I've had with GC is that for the times of day that I'm trading it, it's either doing these massively wicky candles intraday, and you know me, I don't like it when the movement is not smooth. If it's all just like doji after doji after doji and a haphazardly done uptrend, to me that's like, ugh. It's I call it the ick factor on the price action. Platinum had that recently. I used to trade platinum just like 2 years ago. Sorry, 2 months ago. 2 years ago. Sorry, somebody's calling me. Who is that? Go away. And when platinum is moving nicely, it's beautiful, right? But this is what we've had the last 2-3 weeks. Just ever since it rose into July, it's just been a non-event. So until that changes, until I get some more committed moves on the daily chart, I don't want to trade it. It's not my market conditions, I trade multiple things. I can be choosy. And then let's look at GC. Now GC, in a similar vein, a lot of overlapping values, haphazardly going down, and then doing this 3-bar reversal for now. But don't forget the daily chart, the current candle, it's not done yet, okay? So if this goes into a massive reversion during COMEX and you're thinking 3-bar reversal, I'm going to hold this because it's a 3-bar, it's not done yet. So when the day is done, you can call a 3-bar reversal on a daily. Until that happens, be very careful because, post NY cut, gold has a huge connection to the Australian dollar. We'll see what happens at 9 a.m. Central. That's the NY cut. If there's a big option there today, that might get interesting. Okay. Robin says, "This is the one who got me hooked on copper." It's a beautiful product. And to me, I think it's better than, much better than gold at the moment. It's smooth, you know, it makes a decision and it goes. And gold is like, are we going? It's like, what are you doing? Like, just do something. And then it goes whoosh. And you're like, oh, great, I wasn't in on that. I was stalking it 3 hours and then I didn't get in on it. Damn it. Anne-Marie is there. Anne-Marie, let me ask you, are you doing mental Q today as well, or is it just me? I don't know whether Fabio had something planned. Since you're here, might as well ask you. Yeah, she's saying, I was just wondering about what's going on with GC, exploding into the 3-day implied volatility move already. Yeah, it's bank holiday in London, so there's nobody to... the sound effects. Yes, poor musician. Okay, it's just me this time. Okay, that's cool. I think it's probably because we're talking about oil, and that's more kind of my turf, my specialty. Nerd takeover. Yeah, we should have the 3 of us on the Euro trade one day. That'd be fun. Lose all the viewers. Like, yeah, some probabilities and stats. Yeah, but gold, you know, even on an intraday time frame, like it's been really interesting. So look at this. Chop, whoosh. Chop. You slowly go. This must be like after hours. Yeah. Out of hours. And then whoosh. Then chop, whoosh. It's like, oh, gold. You fickle beast. So yeah, I like the moves to look more like this, right? And that's exactly what you get on copper intraday. It's a commitment to one side that keeps going. I'm not getting involved in this. Like, do you want to torture yourself? What is this, like, you know, sadomaso activity? You like being in pain? Because I don't. Let's have a look at some questions. What are the blue volume bars on your chart? That's the volume profile. Visible range volume profile, VPVR. You can find it in the indicators by going VPVR or typing in the whole volume profile, then you're going to find it. So there it is. Looking forward to the TPOs arriving at some point. Jake says, when looking for a structure on the daily time frame, what is the most important thing to look for? It's to me, it's whether we're breaking away from an area and sustaining either above it or below it, and whether there's follow through. So for me, if I'm looking at, let's go back to copper. If I'm looking at the daily chart of copper, and I'm just analyzing the market structure, this one is very obvious, right? We left the area and then some. But we started to go below. So this one day, when we had the consolidation, so all of these 1, 2, 3, 4 candles, even this one, they were opening and closing within a pretty narrow range span. And then this one is an outlier. Why? Because it closes below the previous candle's opens and closes. So this was equilibrium. This one starts to break equilibrium. And then all we had the next day is a continuation. Now, this actually started in Asia, so I only caught like the middle of this, and I caught a good chunk of it. I had like a 4-hour trade on that. But yeah, I missed a whole bunch of stuff up here, which is absolutely fine. I don't normally trade Asia. I trade Asia like 3 times a year, if that. Hold on, Robert. I've just seen something. We need to tell Dolby to send over schedules. Is this... Hold on. Is this like on the schedule? Tuesday, 12 p.m. CT? Like, is that actually us? Or is it just an idea? Lunchbox trading Tuesday, 12 CT, 12 p.m. CT. Let me know, because I actually have the final 150k subs then. I can't do it. Like I need to reach out to Dolby. Yeah. I would like to be asked for the schedule changes before they happen. Like Tim used to do that quite well. But you can't just put me on like willy-nilly, you know? That's a shame. Because if he had asked me last week, I would have told him that I'm doing... And we can't really reschedule the 150Ks, can we? Hold on. I got my time zones wrong. No, I can do it. Because it's 6 p.m. But what if my... So I'm panicking now. You just made me very anxious. Okay, breathe, Dee, breathe. Okay, so basically the problem is that I have the 150k subscribers starting at like literally an hour before, and I have a fair amount of slides to go through, so I'm not sure I can finish them in an hour. I can try, but you know, maybe I'll have to be a little bit late for lunchbox trading. Yeah, Himant, thank you, Anne-Marie, for coming to my rescue. Himant, I'm a married woman. I've been with my husband for 20 years, 10 years out of that married. So, you know, I know I look like a kid, but I'm not. So, yeah. Sarah, oh, really? Yeah, they did have some problems with... Oh, that's a shame. So, yeah, Discord has a group. They did send out emails, but I think there was like no times and stuff. So tomorrow, 11 a.m. Central is my final risk management 150k subscribers. Yeah. Hemant, you don't want me. I'm almost 45, mate. Like, find a young chick. I work all the time as well. You know, it's like I actually had somebody who met me through when I still had my IT recruitment company. Somebody met me, and they were a little bit like, oh yeah. And I'm pretty sure the dude was married as well. So I was like, what are you doing, mate? But he was like, yeah, let's talk about IT and, you know, doing business together. And it was very obvious that there was not going to be any business. So I was like, yeah, I'm just going to leave. And he's like, no, I just want to, you know, would you like a wine? And I'm like, no, just stop it. I was like, what's wrong with people? King Jones is like, what is happening? Oh, we're just talking stories because nothing's going on. What is my accent? My accent is a bastardization of the British English. That's because I am originally Serbian, Italian, and Greek, but born and raised in Belgrade, Serbia. So there you are. And then I moved. I always had the connections to London because I had my parents living here when my sister was born, and then we kept kind of coming to visit. My auntie was living here for a while as well. Well, for a while, 50 years. For a while. So I kind of grew up with English language, but it was one of those things where my original accent got kind of smushed in with, and you know, I used to visit the States quite a bit, and every time I was over there, then I would take on the accents of people around me, which was really annoying because people were thinking that I'm making fun of them. So now I say some words in very like British way, but then others are like demand. Why? Because I talk to my top steppers here. I don't really talk to many other people apart from my husband, because, you know, hermit lady over here. And naturally I start taking on other people's, you know, phrases, accents, and that's the musician in me. Wow, very range bound. Let's have a look at what the options are doing in copper to get ready maybe for the next session, because this is just like nothing's happening. All right, so we have 1 day max expected volatility 476. So that is kind of like my ADRs, except they take it from the options volatility. So 76. So we're already like at kind of the top areas here. Sometimes they will overshoot. I'm going to put this in white. Now this is mentor Q levels now. What these are, they're end of day options levels, right? They're not intraday. Sometimes if we have like a super big day, I might kind of, it depends on what I'm trading as well, but some of them have the intraday snapshots, so you can like see how things are changing. But I don't use that every day, because I found that especially on copper, once they have their levels from the previous day, they do remain pretty consistent throughout the couple of weeks as well. They might change the weight, so you know, one day that might be a core resistance, another day it might be GEX2, you know, but it's like it's still very similar levels with very similar weights attached to them, or interest, however you want to call it. GEX2 has been reactive, so 75. That's where this is. Now here's the thing with bunched up options levels like this. If you get like 3 or 4 of them and they're all very close to each other, more often than not, that will be your new range and a chop zone, okay? So whenever I see that, I don't like trading inside those levels, and I like to have a nice big space from one gamma exposure level to the next. That sort of gives you a risk reward as well in the trade. And then GEX3 is not until 472, which magically matches right around my COMEX value high. And in fact, when it's so close together, I actually like to edit them like this. Because it's just there. It's within a few ticks, right? It's the same thing. And then we had the gamma wall at 470. And lo and behold, it's where settlement is. Oh, isn't that how odd? How odd that they would have options levels at like previously important areas like the close price. What am I doing? Gamma wall. Okay. Yeah. That's what I wanted. There you go. So now I basically look for how the market behaves around all of these levels on my chart. Right now, it's distributing, right? So I either have to wait until this resolves, or maybe kind of fish the range from the top here and then sit on it for the next 4 hours for the break below. But today, I would say that the value acceptances are more higher probability, or more. They're higher probability than the longs, I think. This whole troll back upwards is a little bit non-committal. So I would expect to see a continuation of whatever we started last week on copper. I did that one. Let's read this one. What do you think about GC? Just broke through a big resistance level. GC doing GC things. I have no thought. My thought is not here for GC. Midnight trading hours, Jake wants to know. What are your thoughts? I used to trade between 12 to 3 a.m. What time zone are we talking about, Jake? Where are you based? because you know people are like referencing their their local time, and it's like, well, midnight till 3 a.m. my time. It's Tokyo hours, so Tokyo opens at 12. So we'll see. This is a big range move all around pre-market, Anne-Marie says. Yeah, I mean, they have been moving it in certain areas. It's just London is not open. So it's like Asia was, I don't know whether Asia was open. I think Hong Kong was definitely open. I think Japan had a bank holiday too. And, you know, Hong Kong is actually a pretty big exchange, if not the biggest, according to... looks like a flag pattern. No, flag pattern has a slope to it. This doesn't have a slope. This is like soldiers, consolidation. This is not a flag pattern. Devil is in the detail. A flag pattern is when you've got... No, so let me find maybe a trend line or something. Here we go. Okay, so trend line. Flag pattern resembles a flag. It doesn't resemble a rectangle, right? So it doesn't look like this. It's not like that. It has a little bit of a slope to it. So it usually has something like this, right? Or something like this as well. Flag pattern, flag pattern, flag pattern. But when it's this flat, this is markup, distribution, and then what's the most likely outcome? Liquidation, Wyckoff. But the flags always have to have that little slope in them in the consolidating areas, and it's not even consolidating. It has a trend to it. It has like a micro trend to it. That's a flagging pattern. This isn't. Yeah, Robert, I'm terrible with audience interaction. Always have been. Every time I was doing my YouTube, I had to like write it into the script because I would just go through the entirety of the script and then go, oh no, I didn't do the audience interaction. And yeah, I'm musician nerd, trader nerd. So yeah, click the like, please, for all the other nerds in the world talking about probabilities and exercising discipline as well, not just clicking buttons on a Monday bank holiday in the UK. I'm being very strong right now. I really want to trade. It's a joke, right? I'm fully capable of sitting here and not doing any trades whatsoever. I know it's not very exciting, but, you know, I had a plan. I have a plan still for a number of things. Just not on a bank holiday London. So I need to wait until COMEX and NYMEX open. Let's have a look at what Nat Gas is doing, because usually around about this time it starts to move. And it hasn't. It's lovely. I suppose we're sitting underneath VWAP. Let's grab another chart here. NG, no, that's the interval. Someday I will get all of these, all of the buttons. These are old levels, so don't look at them. We're coming into a little bit of a speed bump supply here. The only trend is down. I marked off this supply when I was talking. I don't know what session it is. They're all blending in together. Whether it was 150, I think it was 150k subscribers, but basically I said there is a level here. And there is another level here. Now, the only wrench in the works is if this gets pulled by whatever OPEC is doing, OPEC Plus is doing. And then, you know, if there's something going on fundamentally, natural gas will we just completely ignore the technicals. But as it stands right now, this is where a lot of the inventory was held, and they caused a little bit of a, here's this accumulation, right? Or is it a distribution? Yeah, we fell. You see, I'm still, so basically another phase one rarity that went into continuation. It wasn't the most perfect starter point, right? But it was still a potentially, problematic area for further downside. However, we never went into a resolution of the starter area. I call it the starter area because it doesn't go anywhere. It just goes. It's like, and this is why you have to look out for the price to exit the area. We had somebody asking about that. To exit the area of consolidation or of any kind of a problem point. This one resolved to the downside. Ergo, this is now continuing into a liquidation. So we started with a liquidation, had a speed bump, continued. That's less probable. But I would argue, because we were fairly new to the trend at that point, because we kind of smashed through this range bound area. So we had a range, and then smash, start a point to reach the previous areas of supply, because this is where the range was. And then we failed there, created a selling wick, not too big, but still a selling wick. The very next day, bled through that, start a point again, more bleeding. So yeah, that's a problem area now. And if we're only looking at technicals, we're not putting any macro into the mix. This could, again, nothing is 100%. This could lead to yet another reversal down. So this is like a big pullback into a supply, previous supply. First test of it as well. So we'll see. But if, like I said, if OPEC is doing something, frequently natural gas might get pulled. Like, for example, if you had Friday, we had crude oil just, it just went up because of the news, and natural gas just followed. I was like, yo, nat gas, like, what's up? How does that concern you again? I know, it was Thursday, I think. It was Thursday. It wasn't Friday. Got my days mixed up. So yeah, some correlations need to be taken into consideration, especially in the commodities. Jake says, I'm thinking about opening a second eval. Would it be best to open a 50K again, as I have an express 50K account of 100? Do you know what? How many payouts do you have, Jake? 2 trades. Where did you find this phase concept? I took it from Wyckoff, but then I just renamed it because I kept confusing distribution and accumulation as words. So it's like a distribution. Yes, brilliant, very clear, D. So I just thought to myself, I'm just going to call it 1, 2, 3, and 4. And again, somewhere KO, what's the best account breakdown? I hit 1.5 on 3 50K new evals, opening the 4th. Okay, KO, have you ever received a payout? So we're talking evals now, both from Jake and from Co. I sound like some weird animal. Go. No, you've never received a pair. What the hell are you doing buying 4 combines then? Can we please survive in one before we start blowing money? Jake, different story. Had 27 payouts so far for an 83% win rate. Okay. Jake, get 150K. different chapters. Different chapters. We have Co, who has never received a payout, and we have Jake, who has received lots of payouts. Yeah, Robert, I usually start losing it at this point in the stream, which is why we're going to end the stream in about 5 minutes. Because I need caffeine and nicotine. That's what I need right now. Yeah, so you see how we have different chapters in life. You know, we frequently look at traders who are on the big boards, you know, or traders who are like top 5 P&Ls, and people are salivating and comparing themselves to that. But it is not about, it's about the process. And if I could be bothered, I would drag out Pete, the process parrot, but I can't be bothered right now. And it's one of the, you know, it's one of the big things where people think you can go from zero to hero without the steps in between, or to go from crawling to doing marathons immediately. It's not how it works, even in trading. Just because a click of the button is all is required, it doesn't mean that you don't need some pretty sophisticated psychological skills to make it work over time. So whenever I see people buying evals without any payouts, payout proof or proof of concept, to me it's like better that you take that money, go to your window, and just go whoosh, just throw it in the wind, because at least somebody else is going to benefit from it, right? It's too soon. KO, or Co. Sorry for butchering your name. Basically, you need proof of concept that your strategy works over time under high pressure environment. And just like it's not the same getting prepared to get deployed in Iraq by playing paintball with your friends, it's not the same passing combines versus trading in an XFA. Okay? It's a funny analogy, right? Pew, 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 pew. And yet, you know, people think that, or, you know, even worse, playing CS2, Counter-Strike, on your computer, that you're going to be a good soldier because that, it's like, it's an effing video game, mate. It's like, get real. Really? So, eval is an evaluation. Read the Topstep website, maybe, shoes here. Anne-Marie says their account sizes are also important to note for those big swingers. Their risk is managed and in a combine and an XFA. Yeah, exactly. So usually once you get to, you know, the live funded account, it's like you are going to have a daily loss limit. The risk team is not going to usually allow you to just be like, yeah, trade the 150K of our money with no loss limits daily. So they will put shackles on you, you know, and that means that the big swingers either have a good way of averaging into trending moves, or they're just used to the high pressure and it doesn't bother them. Like a typical example of somebody who's not super bothered by high risk and has a high risk appetite is Dakota. Dakota has a very high risk appetite. I can't trade the size that he trades on the balances that we have. Like I would need, you know, 100 grand balance to actually move up to like about 5 or 6 minis. I would also, you know, trade the accounts only through like 1 mini, 5 micros, especially if we have enough volatility. Very rarely when I see like maybe a star setup, I might pop in 2 lots, but then I will do a partial stop, because I still want to control the downside, right? So for example, if I maybe go to the combine, my Euro class, and let's just do an example here. Let's say it's a range bound day. We have all of these levels here, and let's do 2 lots. And I usually use, in this volatility, I have been using stops that are like 56 ticks. But if I'm seeing like a super strong setup, which by the way this isn't, I would then look at my MAE, which is typically about 60% of the account. Then what I would do, I would go stop buy. So I would have partials inside my stop loss because I'm running a big size. Then if my And typically this partial stop out is a few ticks over my average MAE number. So it's not like exactly on the MAE because I expect that to be reached. And then on the flip side, if I'm not doing that, I might actually go short one and then use the MAE point. So still a 56 tick stop, which is my default stop size. And then once this drags into my MAE, maximum adverse excursion, I then add. And what that does is that, but I never go over my maximum default size. So that's the biggest takeaway here. If you go and say, my maximum default size is 1 lot, or like let's say 10 mini, and then you enter the 10 mini, and then it draws against you, and then you go in another 20 mini, I'm just going to go... I'm gonna be not happy because then I have a moment. If this page can load ever, come on. We have this sort of a moment. Double face palm. When one face palm is not enough. Why? Because what have you done? By doubling your size past your default plan, what have you done? Yeah, you might have reduced your stop loss somewhat, but then what people go and do, they're like, oh God, that's now going to hit my stop loss because that's going to be wrong because it's not based on any data, right? Mine is based on data, and then they go, I'm just going to increase the stop to like 1,000,000 ticks and then pray that it comes back to you. It's like, no, the stop loss stays at 56, no matter what, no matter what happens. That's your maximum default stop. Only if I manage to, to maybe somehow position myself with a smaller stop and then it goes in my favor, I might add onto my position, but I still don't add past my maximum default size. Does that make sense? So it's all about like what are you planning to do and never going over. Like for example, if I was going to add, so let's try this again. So if I was going to add, let's say I'm looking for a stop run and then it goes down. So I'm looking for shorts and I decide that this has potential to go down. So I will enter with a less stop size that doesn't break market structure. So if you look at here, I'm well above the high. So even if we stop run again, which we've just done, I'm safe-ish from the next stop run, right? And if they begin to really kind of push this down, I then have space to add more size within my maximum default size and my maximum default stop. But if this moves so far away that my maximum resulting stop loss is bigger than 56, that is breaking the risk model of the system and introducing a variability, because anything is a variable. Whatever you change, it's a variable. And it's so sensitive to messing with things. People mess with risk models without knowing what they're doing, and then they're like, it's not working, I lost an XFA. It's like, I'm not surprised. Like, really? Like, you've changed the stop loss size every day. You change levels that you use every day. You change size, like it's like, like you're changing socks or something every day. Like, have a risk model, have a plan. It's all a part of a plan, right? If you don't have a plan and you're complaining you're losing, it's not working. Like, you've only got yourself to blame. I'm sorry, I have no sympathy for you. Chaos says, okay, can you give me some advice then? Yeah, just pass one or stick to the ones that you've got now. Less risk in XFA, so yeah. But just beware, because it's not about levels. It's about your emotions and the dopamine rises and crashes that you tend to have while trading in an XFA. Why is it so hard to get a payout? Because people have self-limiting beliefs that they're not dealing with. Watch Neuro Wednesdays. We're going to have Dr. Jerome D. He is one of our top traders at Topstep, but also a neuroscientist. So we connect everything, reasons why certain behaviors have a hold on us and how to replace them. that's where most of the work will be done, right? Levels you like learn in 3 months. That's the easy part. It's all the PBKC error, problem between keyboard and chair. That's the thing that causes issues. It's not the levels. All right, guys, I'm going to finish it up here. And thank you for being here with me. Great to see Robert and Anne-Marie in the chat. That was very fun. Join me again tomorrow, so for another Euro trade. And it does look like I might be on with Anne-Marie and Robert on Tuesday. So fingers crossed I could jam the 150k subscribers in an hour. I'm going to have to talk faster than I normally do, but we'll make it work. We'll make it work. All right, that's it for today. Enjoy the rest of the day. If you're in the UK, enjoy your bank holiday. Hopefully we get some more good weather, even though it's not looking great today. And yeah, enjoy the rest of the broadcast. I will see you again tomorrow. I'm Marcus Okadi. This has been the Eurotrade. Take care.